Hey everyone, welcome back to Talk Tickers, the show where we slice and dice the latest earnings calls. Today, we're jumping right into IAC's fourth quarter 2025 results.
All right, so here's the game plan. We'll kick things off with a quick snapshot of the results. Then we'll get into what I'm calling the two-handed story from management. After that, we'll unpack the big pivot happening at People Inc., check in on capital and catalysts, and then wrap it all up with our take, the next call.
Okay, first things first, let's look at the headline numbers that had everyone talking before the market even opened.
So right out of the gate, what we got was a classic mixed bag. A revenue beat on one side and a guidance miss on the other. This really sets the stage for the main conflict of this whole story. A pretty solid quarter that's getting overshadowed by a really cautious look ahead to 2026.
All right, let's drill down a bit. You can see here, revenue came in just a little ahead of what Wall Street was expecting. That's a check in the plus column. But, and this is a big but, the GAAP EPS was a huge miss. So what did management do? They immediately tried to pivot the conversation over to Adjusted EBITDA, which, to be fair, showed some really strong 15% year-over-year growth. It's a classic move to frame their preferred narrative. And this number, right here, this is the star of the show for them. The digital engine over at People Inc. absolutely crushed it, growing an impressive 14% year-over-year. I mean, in this tough environment for digital publishing, that really defied the doubters and gave management a solid positive story to tell. So that contrast really builds this core narrative tension, this two-handed story that basically defined the entire earnings call. Let's dig into that.
So on one hand, you've got the chairman, the legendary Barry Diller, coming out absolutely swinging. He essentially says their own guidance for People Inc. is too conservative and he's super confident in its momentum. He's saying, I would be very disappointed if People did not exceed that number. That's a strong statement.
But then, on the other hand, you look at the official numbers they put out for the full year 2026, and it tells a much, much more cautious story. You know, the midpoint for the entire company's guidance? It came in below what analysts were modeling. And that's because of these heavy corporate costs and a lot of uncertainty in their search business.
Okay, so to really understand what's going on, you have to get this strategic pivot at People Inc. It's the key to everything. It explains both Diller's confidence and the market's worries.
The CEO of People Inc., Neil Vogel, didn't shy away from it. He got right to the elephant in the room, this massive drop in traffic coming from Google search. We're talking a 50% drop over 2 years. That's the primary threat they're facing from this whole AI search disruption.
So how are they fighting back? Well, this chart tells the story perfectly. Look at this. The revenue they get from traditional website visits, what they call session-based revenue, it grew just 4%. Okay, but look at their off-platform, non-session-based revenue. It absolutely exploded, growing an incredible 37%.
This isn't just a small change, folks. This is a fundamental shift in their entire business model. This non-session revenue, we're talking about money they make from places other than people visiting their website, like social media, live events, and even these new AI licensing deals. It now makes up a whopping 38% of their total digital revenue. And it is, without a doubt, the engine driving all of their growth right now.
All right, but IAC isn't just about its operating businesses. It's also very much a story about how they allocate capital. Let's take a look.
So they're definitely putting their money to work. In the fourth quarter, they kept buying back their own stock, which investors like to see, but they also upped their stake in MGM. Now, why MGM? Well, Barry Diller sees it as this kind of fortress asset, something that's insulated from the tech disruption that's hitting his other businesses. You can't just build another Las Vegas Strip, right? So looking ahead, the big catalysts for the stock are going to be, can they prove this People Inc. pivot is actually profitable, and can they get Care.com growing again?
Okay, so after all that, what does this actually mean for the stock? Where is it headed from here? This is the next call.
It really all boils down to this debate. You have the bull case, which says, hey, this pivot at People Inc. is working, their iconic brands are a shield against AI, and management is making smart investments. But then you have the bear case, which points to that cautious guidance and says, what if AI disruption gets worse? What if it overwhelms these new revenue streams? And you still have that uncertainty in search and Care.com weighing everything down. So here's our prediction. For the next quarter, we expect to see People Inc. keep growing its digital revenue, probably in that mid to high single-digit range. But we think margins are going to be under pressure from all the money they're spending on this pivot and some litigation costs. What does that mean for the stock? We think it's going to be range-bound for a while. The market is basically stuck digesting this two-handed story, waiting for more concrete proof that this new strategy can actually drive real, meaningful profit for the whole company.
And because of that, we're initiating our coverage with a market perform rating. Look, the strategy itself seems pretty sound, but the uncertainty that's baked into their own guidance, it just warrants a neutral wait-and-see stance for now.
And, as always, please remember, this is not financial advice.